Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, Professor of Economics at the Catholic University. Professor Young, thank you for coming on today.
Happy to be here.
Well, Wall Street took a breather on Tuesday for the most part, but the Nasdaq did manage a gain, briefly touching 10,000 points. The Fed's open market committee meeting in the background to all this. What's the story in the global markets today?
Okay, well, for the U.S. stock market, Monday was a very happy day. Dow and S&P reached the early January 2020 levels, so a lot of newspapers were celebrating that the stock market erased the losses of 2020. Nasdaq actually reached levels which were above the pre-coronavirus highs, so they actually were way above what they were at the beginning of the year. But on Tuesday, Dow and S&P, as you mentioned, fell. Dow fell by about 1%. S&P fell by about 0.8%, though Nasdaq continued to rise. And there has been some increasing questions on whether these stock prices are warranted. Has the economy really improved to such a level that the pre-corona effects from the coronavirus has disappeared? And you have to remember that before the coronavirus, there was some suspicion that even then the market was somewhat overpriced. For example, Hertz, the U.S. rental car company, it filed for bankruptcy in May, but apparently it reached its pre-coronavirus stock price. So even though in May this company filed for bankruptcy, the stock price right now is the same as the pre-bankruptcy price. So there has been a lot of questions on whether these numbers were warranted, and I think that's part of the reason why we saw the markets fall for Dow and S&P on Tuesday. And reportedly, a lot of this rise is driven by individual investors like Korea, but there are some questions on whether a lot of these individual investors' investments are warranted. Europe, they haven't come close to recovering the coronavirus losses yet. The Asian stock, Shanghai and Hong Kong, again, they're nowhere near how they did at the beginning of 2020, but they did well this last week and this week. They're down a little bit today. They're still trading, and they're probably following the U.S. market. The Nikkei, Japanese Nikkei, it's almost approaching the beginning of the year levels. It fell a bit toward the end of last week, but it rose today. Kospi, it's holding on the levels for the last few days, but ironically, the value that they ended today is just between the value of December 31st last year and January 2nd this year. So Kospi, like the U.S. stocks, have apparently erased the losses of 2020. Nasdaq is doing very well. They're actually 9.5% above the highest levels of this year that they reached in February, so they're at the highest levels of the year so far.
Well, now in the bigger picture, institutions like the World Bank are predicting the global economy to shrink this year by 5.2%, and that figure could go down further. The forecast for the advanced economies is lower than that. What do you make of these figures?
Okay, well, the numbers the estimates forecast that's coming up right now, they're useful in a sense that they're giving you some idea of how the economy is going and will do, but as far as accuracy is concerned, no one really knows. It's interesting to compare these numbers to the IMF projections that came out in April. Now, the World Bank projections say that in 2020, the global economy will fall by 5.2%, as you mentioned. The IMF numbers just about 6 weeks ago was minus 3.0%. Now, the advanced economies are expected to decline by 7.0% in the World Bank figures. IMF figures, again, 6 weeks ago, minus 6.1%. U.S., their IMF numbers are minus 6.1%, the IMF numbers are minus 5.9%, the World Bank numbers are minus 6.1%, and so on. Virtually all numbers have gotten worse since the IMF projections of 6 weeks ago. And that partially reflects that the IMF and World Bank have slightly different mathematical models, but it also, I think, signifies that the last month's statistics were worse than what a lot of people thought going in March and April. Having said that, though, right now, in the last couple of weeks, especially with the U.S. unemployment figures, it was actually better than what a lot of people expected. It's still bad numbers. The U.S. unemployment figures for May was 13.3%, and they figure that because some of the surveys had some mistakes, it probably is closer to 16%, but still, that was a lot lower than the numbers that they were expecting, which was over 20%. So depending on when the coronavirus finishes and depending on whether there is a second wave of coronavirus or not, all these numbers can change.
Well, now we're almost out of time here, Professor, but briefly comment on the unemployment numbers we just saw come out in Korea for May.
Okay, well, last time the most shocking numbers was that there was there was more than 1 million people who were taking temporary leaves. 1.5 million workers. That was reduced to 1.0 million people in May. So people seem to be working more or less. There's also a large increase in non-economically active population, 555,000. But still, things seems to be getting a bit better. At least it's not as getting bad as quickly as we once feared. Hopefully this trend will continue. One thing that hit me again was that the manufacturing job losses were less than what I had feared. And manufacturing employment is the most vulnerable number right now because the exports are falling. But if the global market for Korean exports recovers, then we may be able to start looking at the dawn of a recovery rather than looking toward darkness.
Indeed. All right, Professor, we'll have to leave it there for now. Thanks so much for sharing your insights.
Thank you.